How's it, guys? Welcome back to FX Rhapsody. Today we're doing analysis on two currency pairs. It's going to be the USD-JPY and then the Euro-USD dollar. Before we hit the charts, just go visit my website. It's on the bottom left corner over here, or the link is in the description, where you can find some nice reading material on forex trading. I've changed the website up a little bit. There's some nice categories there, video categories that you can go watch. For those of you that's starting out on trading, I've categorized it very nicely for you. For those of you that's a bit novice into trading, or you've got more experience in it, there's also some nice strategies. And then I've got a previous analysis video category there where you can watch all my previous analysis that I've done. Also, don't forget to go visit my preferred brokers under the brokers tab. These guys are absolutely brilliant. You always need a reliable broker behind your side when you trade, and you know your money is safe, and you know that these brokers will not be able to manipulate any of your trades, or these guys are just absolutely brilliant. Also, I have updated the COT reports. We will be using it on this analysis today, so you can go download that under the resource tab. Okay, without further ado, let's hit the charts. We're starting off on the USD-JPY, the US dollar Japanese yen. We're doing top-down analysis starting from the daily time frame and then moving our way to the hourly time frame. So on the daily time frame, what we can see is a nice little downwards movement of the US dollar Japanese yen. So basically the Japanese yen strengthening a little bit. Let's just go see the COT reports, and then we can see what's happening there. So you can see on the COT reports that the Japanese yen went from a negative net position, from a negative 102, so it's up to a negative 65,000. So basically you can see a lot of shorts being closed in the market. You have got some longs being closed, but more shorts, and that is why that net position is getting a little bit stronger. And as you can see in this little chart over here as well, that the Japanese yen is moving upwards. Okay, so that is why excuse me, that is why we can see this effect here of this downwards movement of the Japanese US dollar Japanese yen. So the Japanese yen strengthening a little bit, and now we can see, do we see another little bit of a pullback? First of all, let's just draw this little line over here so you can see that is a nice little area in the market, little structure in the market with this upwards movement. And you can see price just retracing back to that area, not breaking that area yet, because I would like to see if there's any type of a pullback and continuation downwards. Okay, we have got a nice little fair value gap, so I would like to see price just hitting into that area over here, something similar to that. Also, if we have a Fibonacci level from this high to this swing low, okay, we might see a deeper retracement into that. So you can also, because there's some nice swing highs and swing low, you just move it down a little bit, so you can see that the 62% area is hitting somewhere over there. So a nice retracement before any continuation downwards, or we can still see continuation upwards, but we will see what the Japanese yen does towards the end of this year. Will it strengthen or will it not? 4 hour time frame, again, we're just gonna zoom it up a little, zoom it in a little bit. So again, we're just looking at, there was a fair value gap that was created over here, price, just tapping slightly into that, and then on a bigger scale, you just have a look here. So that is going to be another gap that we are going to be watching. But again, price just in this little range area over here. So we see that, okay, this, and then we can see this little at the bottom where price, we had price breaking below that area but not closing. Okay, we had price going down that area. Excuse me, let me just draw it a little bit better. So price just pushing through that support area, coming back and just closing above it. So we have got this little, consolidation. It's ranging in the market. So I would like to see price breaking above it or below it before reacting to what price, gives us, and then we trade accordingly. On the hour time frame, just zooming out. So this is where we basically ended last week. So right over here. And as we can see, there's some nice little movement. Again, just this consolidation, that was happening, as you can see, just ranging in the market. But still, there were some nice trading opportunities within that consolidation area. First one was, there was a fair value gap that was created over here. And as you can see, price just tapping into that area. Okay, so price breaking above this section or this highlighted area, this line that I was drawing, that was a previous high, price breaking above it, and then coming back down into that area. And that is an area where you can place a nice little buy setup. Okay, so that is a nice movement upwards. So you have a buy setup here. And where is your target going to be? Your target is going to be where the Fibonacci retraces. So where does the Fibonacci retrace? Because when price broke up and price came down, okay, you had an area of a market, of a fair value gap that price was going to retrace back to. Okay, so you have a high and then you had a low. Okay, so you would have had an area that you can buy up. Okay, because that's a fair value gap trigger for a nice little setup upwards. So then I'm just going to do that. Just close all of this. So that is your area that you buy upwards. And then there's an area in the market that you want to start looking for sell opportunities, because that's a retracement area. And that is going to be the area between the 62 and the 79% area. So that is where you place your sell area, your sell orders. Now you had a little buy upwards, okay, towards the 62%, which is almost 70 pips. So now you place your sell order. So I'm just going to take that out. So you have got a sell order there, over here. And then price started moving downwards because it hit the 62 retracement and then it moved downwards. Now where is your target area at the bottom here? Okay, where is that? What do I always say? Look left. So now we go left. Okay, we go left. Okay, so now we're going to an area that we're looking for a fair value gap that hasn't been reached yet. So if we go back to the 28th of August, let's call it here, 28th of August. Okay, we can see a little movement upwards. There was a gap in the market and then the fair value gap was created. Look at that. Okay, that was a fair value gap and everybody can see that gap in the market that was created. That gap has not been reached yet. Just to show you, let's go all the way back to basically where we're at now. Okay, I'm not gonna forward this section here because I want to show you this area has not been reached yet in the market. Okay, now we're going into September. We're going into October. So that is just, you know, as you can see, price just staying above this line. I mean, price is up here. And we want all these areas in the market to come retrace to. There's a lot of times, and I've explained it to you guys as well, once you get two scenarios. You get a scenario where the fair value gap gets retraced back to immediately, and there's a scenario that, you know, you use your fair value gap as a target for an exit entry. So now we're getting back to our area of target. Look at that. That's the fair value gap that was created back in, what was it, August, September, yeah, just end of August, beginning September. And that area, or that fair value gap, was filled by this long bearish candle. And that is your target. Okay, it's amazing how these things work out. So guys, just remember to keep your little fair value gaps in the market. If it gets touched, you delete it. Otherwise, keep it there for targets. And if you kept that one as a target, you would have been in this cell and you would have seen, oh, there's a fair value gap at the bottom. Maybe that's the area of target that's going to hit, and lo and behold, target hit. That's your exit area. And then you see price just, you know, carrying on upwards and continuing with the consolidation. So we are ending this currency pair with this two lines that I'm going to be focusing on. We're obviously looking at that consolidation area, but again, on a 4 hour, before we trade any big trades on a 4 hour, you can see that, or this big consolidation, it still needs to break that. But as you can see, within the consolidation, within the ranging of the markets, you can still catch a couple of pips. I mean, we saw that was a 70 pip upwards, and if you caught that sell downwards, you would have been, it was at 270 almost pips downwards. So there is pips to be caught within a range, and people must realize that even if you drill down to a lower time frame, you know, it is tradable. Okay, so now we're looking at these two areas. We're looking for at this high, this low. We want to see price breaking above it, below it, creating any fair value gap, any retracement of the Fibonacci, and then we will react to what the market gives us. Okay, so that is it for USDJPY. Let's move on to our next currency pair, which will be the EURUSD dollar. Now, before, oops, wrong one. Let's just go to the daily time frame. Okay, so on a daily time frame, again, you know, we had a nice push upwards. Okay, a nice movement upwards for the euro. And why did that happen? We just go to the COT reports, Euro USD, and we can confirm, or the COT reports will confirm that movement. And you can see this net position just growing. Okay, you can see shorts being closed in the market, longs being opened. Again, longs being closed, more shorts being closed, a lot more longs being opened, and a little bit of short. So that just net position is just growing and growing, and as you can see in this chart. So that is why we see this effect of the of the euro just moving upwards. Euro just getting stronger against the dollar, but now we see a little bit of a downwards movement. So I would just want to highlight this area over here. Let's just do that. There we go. So as we can see, price just breaking above that high. Okay, just taking out this this high that was here. There's liquidity, and as you can see, just hunting that area in the market. So price hunting that liquidity that was up here, and we see a retracement back into this section over here. So again, there's also been a couple of fair value gaps that was created. So just don't ever forget about these areas. Okay, so price might retrace back to that and then carry on upwards, or price is just going to start turning downwards and continue downwards. And basically, as we can see, there has been some consolidation up and downwards. But let's have a look and see what market gives us, coming this week. On a 4-hour time frame, just wanted to zoom in a little bit. So in a 4-hour time frame, we just, a little bit of a downwards movement in your, there we go. Let's just do it better. Okay. So we have a nice little trend line, as you can see, price touching that area, coming back again, just retracing back to the trend line again every single time, not breaking that and just staying below it. So we have got these areas in the market as well. We have got liquidity areas in the market, okay? Lows that has not been taken out, okay? These are areas in the market that we want to see. If price starts taking out these lows, it is going to be hunting liquidity, okay? So we need to also realize and take note of these areas in the market. So let's go down to the 1-hour time frame. So a couple of things happening on a 1-hour time frame, like always. Okay. So we ended off last week. We had a nice big area that I was focusing on. But as you can see, price is moving upwards. And again, similar to the USDJPY, just, ranging a little bit. But again, with the ranging, with the consolidation in the market, there is opportunity for buyers and sells. And as you can see, there's a long bullish candle, price moving downwards and then pushing upwards, just creating this little gap in the market there, fair value gap. Price retracing into that, and you started moving up and then retracing back, okay? So just wanted to show you here. So that's a high and that's a low being created. That's a swing high, swing low, swing high, Fibonacci, retracement, 62%. Easy, okay? That is just how it works. Price shooting upwards. Now, price shot up, okay? And then it made a sharp turn at the top. Price came down again. Then price started moving up again, upwards. And then turning down. So we saw on the 4-hour time frame, there was a type of a trend line going down. So you have one area in the market and then another area. And, just with a naked eye, okay, you can see this trend line. Sorry, that was a very bad trend line. So just with a naked eye, you see a trend line being formed in the market. Okay, let's just do that and just get it nice and neat. I always like to just have all my areas or as much candles and things, touching as possible. So that was the first touch. That was the second touch. Then price came down again. Okay, so now you had a nice little buy upwards with this Fibonacci retracement. You know, nice little 100 and odd pips that you could have bought up. Price shot down again, came up, hitting that second touch of the, and that is when you draw your trend line. Coming down, and then, you know, price moving downwards, and now you think to yourself, okay, cool. Now I've got a type of a trend line going on. So I have a swing high, okay, right about there. I've got a swing low, as you can see, price moving downwards. Price coming up a little bit, moving down, not hitting my 62% area, but my 62% area is very close to where my next trend line touch is going to be. So that is a nice little sell opportunity over there. And then price shot down, you know, not, you know, far, but I mean, if you did catch that little sell, it's a 90 pip sell downwards. So then price coming up again, hitting that trend line again. So now we're just sitting and waiting to see what price is going to be doing, you know, this week. Is it going to break this trend line? You know, very similar to, well, we talked about it now on the 4-hour time frame. We've got this liquidity area, all these lows that's still intact. Will we see price breaking this area? Okay, I'm just going to highlight that. The trend line I'm going to take out, because if price breaks above this area, obviously, then the trend line has been broken. So I'm marking this area, this high, and I'm marking this low. If price is going to break below this area, we will see price taking out this liquidity in the market. So this is the two areas that I'm going to be focusing on for this currency pair this week. So guys, that is all from my side. I hope you enjoyed this analysis, and if you did, don't forget to hit that like button, hit the subscribe button, the notification bell. Show me some love by hitting that super thanks button. Comment in the comment section, let me know what you think. And yeah, there's definitely more analysis coming your way this weekend. So I hope you've been having a fabulous day, a fabulous weekend. Stay safe and happy trading, guys.